Hello, everybody. This is Kevin Gormley again with Leading Edge Financial Planning. And today we have a very special guest, Nolan Clark. Nolan is one of our younger financial planners and working with a lot of our younger pilots as well as our older pilots, quite frankly, Nolan. But Nolan, it looks like in the background there you have a child, John Shepard, I think it is. Is that correct?
Yeah, there he is, little John Shepherd. That's right.
Yeah. Yeah, cool. So once you have a child, it's you no longer sleep well. But the other thing that happens is you immediately start thinking about college. Well, not most human beings, but a financial planner like yourself, I bet you do. So today we're going to talk about college planning. We're going to talk about 529s. We're going to talk about the Texas prepaid tuition credit program. And so I think the first thing we want to do, though, is just say that if you have young kids, the time to start saving for college is now, right, Nolan? What do you think?
Yeah, that's a great point, Kevin. It's almost like retirement in a lot of ways. They say the best time to start is now, and the same goes for college. As you mentioned, I'm a younger fella. I graduated college a few years ago, and I thought, man, I don't have to think about this college stuff anymore. And then we have a baby, and it's like, well, you better open a 529, or in Texas's case, or Florida, or some other states, there's prepaid tuition vehicles. So I think the goal today is to just distinguish what are the differences between the 529 plans, a Texas prepaid tuition program. And as Kevin mentioned, today we're focusing on Texas and their program, but other states do have these available. Maybe if you drop it in the comments, we can do that video in the future, but today it will just be the great state of Texas. So I think that's the mission. And then also, for us, we're thinking these behave differently. They're for the same goal of college, but they are different. And so does it have to be one or the other? Can you use both? What is most optimal? So we'll go through some ways to think about that.
Well, that's super, Nolan. Yeah, I've had a few friends over the years, mostly in Florida, that used their prepaid tuition program, and they were really excited that they used it. And again, anything that we as parents do to help fund college, it takes the stress away as we get older and our children age. So today we're going to talk about Texas. So we got a question from one of our pilot client families, and they said, what do y'all think about the prepaid program?
Yeah, that's a great question. It's kind of, it's in the name a little bit. You're prepaying college for your children at today's rates. That's really the essence of it. And there's a lot of factors of, what happens if you don't stay in Texas and you go somewhere else. Can you still use it? And we'll go through that. But I would say at the end of the day, the thing to know is that you are locking in today's rates for college for your kids who may be going 18 years from now if you're starting early. And the reason that's a big deal is because, as we all know, to no surprise, college has inflated a lot. And, who knows what that will continue to look like, but our guess is that it will continue to. Who knows the rates? So it's attractive, though, that you can lock it in today. And so that's really what I think of with the Texas prepaid plan and really all others in that sense that they
Yeah.
lock that in.
What's really frightening to me, Nolan, looking at college planning is that we've seen college tuition go up by more than almost any other, inflating higher than almost any other good or service that's out there. So, like you said, with the prepaid program, bam, you pay today's prices and you get college in the future. So, if college stops growing as fast, tuition stops growing as fast as it has, it might not be a good deal. But if tuition goes up even more, then it would be a really good deal. So before we jump into the rest of it, I'll just say, you have multiple choices as a parent when you have children that you're thinking about college for. You could use a regular old brokerage account, savings account. Now, they're not really tax benefited. You could use a 529 account, which is tax benefited. Once you receive the money and you put it into the 529, if it's used for college, you never pay tax again on that money. Or you could use this prepaid program, Nolan. So why don't we jump into the meat of the mission here and just look at the differences between these plans and how you're thinking about them as a new expert of college planning.
Just a simple pros and cons list sometimes can help just distinguish between these two. And so, as we mentioned, the Texas Tuition Promise Fund, the prepaid plan here on the left, we got our 529 savings plan. And as Kevin mentioned, in some ways, the 529 is almost like a Roth 401k, except it's for college. So you're saving for that goal. You put the money in, it grows tax free. You take it out, and if it's used for eligible college expenses, then you're able to do that tax free with no penalty as well. And so here on the left, we'll look at the prepaid plan first. As we mentioned, locking in today's rates. That's great. As Kevin mentioned, there are risks. What if it doesn't continue to go up as much? That is something to consider. It says no market risk here, and the reason we put that is because unlike a 529, this money is not going to be invested. It's not going to be an investment vehicle. So when you open up a 529 for your child, it's most likely going to be very aggressive early on. It's going to have a stock portfolio, and then similar to a target date fund in a retirement account, it's going to slowly get less exposure to stocks and become more conservative as the child reaches college age. And so that is a difference, that this is not an investment vehicle, this Texas prepaid plan. A pro is that it says simple and predictable. We'll go through the website and you can determine whether you think it's simple and predictable. I don't think that's probably super true, but I guess the thing to know there is that Kevin mentioned, he's had friends that have used prepaid plans and they've been very happy with it. I think we're both in agreement that whichever one of these you do, if you do one or the other or both, the fact that you're wanting to pay for your kids' college and you're going to have it saved for, that's really the big thing and makes us really excited. The cons, it only covers tuition and fees. And we'll have an example of 2 Texas colleges below, and we'll go into why that's a big deal. But as most of you know, there's room and board. There's a lot of other things that sneak in there with college that turn out to be a pretty big amount. And of course, Texas's program, it says limited to Texas colleges. And that's a con, of course, if your kid decides to go to some other state. I will say you can find this on the frequently asked questions. There's on the website, and we'll show where you can go to find this website. But there are a lot of great questions and answers there. And one of the top ones is just, hey, what if my kid doesn't go to a school in Texas like we planned? Then what will happen is what you have prepaid for. If you had prepaid for $30,000 per year at University of Texas and your kid goes to Florida, then you would still get the $30,000 a year. But if Florida's tuition was above and beyond that, then you would have to cover the difference. That's what that would look like. Kevin, is that what you remember?
Well, it kind of reminds me of exchange rates with cash, So if one currency grows faster than the other currency, then when you exchange your cash, you might not get the great exchange rate. And I think that's the issue here with going to colleges in other parts of the country. It just might not buy you as much. That's what I believe.
Yeah, no, that's a great example. Yep, absolutely. So again, just maybe a little less flexible there in that sense if plans do change. So, Kevin, anything to add to the prepaid plan before we go to the 529s?
Yeah, so I mean, in theory, it's so easy. You just pay for this year's cost of university. If that's 1 year, if you pay for 4 years, you'd pay for this year, next year, the year after, and the year after that. The reason why we don't think it's that simple is you have to figure out how much to pay to buy that, because no one really pays for the whole year at once, Nolan. People usually will put money in, and we'll get to that. And then the big highlight here is that if you start with the Texas Tuition Promise Fund, that is fantastic. That is a great thing to start with. Just know that room and board is not going to be covered. It's really just for tuition and fees.
Yes, absolutely. And so we'll move over really quickly to the 529 before we get into our example. So I think with the 529, the thing to know, that maybe one of the biggest differences between the two is that it's just ultimate flexibility in a lot of ways. You're going to be able to save money into this account. You're not really going to be locking in any tuition rates. It's just whenever you decide to save, that's how much is going to be in there. And then it does have market risk. And so that is appealing to a lot of folks, because with how much college is inflating, it does give you an advantage, and you're able to do some saving, but then it can also pick up some slack there and hopefully get good returns over a long period of time. And of course, that could be a pro, but then it is listed as a con as well because there's risk to that. There's risk to being invested, and so nothing is guaranteed. But it is with the college target date funds and a 529, it does do a good job of as the child gets closer to college, of course, making the money more conservative. It covers, as Kevin mentioned, a lot more of the expenses. So not only is it eligible for tuition and fees, but room and board, a whole list of things. Really, Kevin, do you, off the top of your head, there's a whole lot of them with the 529 that it's eligible to cover.
Yeah, and I mean, with the one big beautiful bill that's just passed, even more can be the 529 can be used even for more expenses.
All right, Kevin, before we go down to our next example, anything else you have on the 529?
So, Nolan, what's really fascinating to me about these two is that you still have risks with either one of these that you use. If you use the Texas Tuition Promise Fund, you don't have market risk. But what if tuition finally starts to slow a little bit? You might be paying more for a future benefit than you will really get. And then with the 529 plan, you really do have a risk of tuition increase. If tuition really goes crazy and increases a lot, you're really going to have to get high returns. And if markets don't cooperate with the timing of when those returns show up, then you might not have enough money. So there's risks in both of these plans is really what I wanted to say, Nolan.
Yeah, that's a great point. And Kevin, did I hear you saying maybe that these could potentially, if used together, maybe be like a hedge against one another in terms of market risk? And if tuition is higher than anticipated, then yes, having the 529 is great. But then if it doesn't continue to accelerate at these rapid levels, then maybe having a little bit of the prepaid plan would be good as well. What do you think?
Yeah, I wasn't saying that, but that's fantastic. That's a great idea, Nolan, using them together and reducing the risk in each category. I think that's a great idea.
Awesome. Well, we'll look at what this could potentially look like in action. But you can see here for Texas A&M, this is from a software that we have all kinds of calculators online, though, and this is just the annual cost for a child today to go to Texas A&M estimated. And so we have tuition and fees, and just as a reminder, the prepaid program, that's the only thing that it's going to cover is tuition and fees. And so this 12,400 number, that's what would be covered for you. And your total annual cost is 26,000. So you would still have some more to get covered there, which, Kevin, that's a pretty big difference there. You're going to want to have a plan, I guess, is my point, for this other money for room and board and books and supplies, almost over half of the cost there. So that's where the 529 could come into play. You could use, it's eligible for room and board, books and supplies. But what are your thoughts, Kevin, when you see this?
Well, yeah, I think you really nailed it. I don't have much to add except that tuition and fees is only one cost of multiple college costs. And for Texas A&M, like you said, it's more than half.
Yep, absolutely. And the University of Texas here, we'll scroll down to the Longhorns, but not going to be much different. Very, very similar on the cost. And again, I will mark out these out-of-state fees, not applicable here, but again, just very similar. Tuition and fees. If you had the prepaid program, you're good here, depending on how many units you bought for that year. But that would cover that. And then room and board, books and supplies, either the 529 or figuring out a way to pay for that. So definitely none of this is cheap, but our hope is that, with these videos and raising some awareness, that really the important thing is, no matter which one you choose, to start saving early is always great, of course.
Let's do this now, Nolan. So we do want to be helpful for someone that says, look, I'm all in on both plans. And the 529, you open up an account in your state, or really in any state, if there's no tax deduction. Tennessee, there is no income tax deduction. If you're in Ohio or Wisconsin or many other Kentucky, there are states that you will get an income tax deduction, so you want to go there. But the 529 is pretty much the easy button. You open up an account, you start putting money in. For the prepaid plans, it's a little bit trickier. So if you don't mind just taking through how the Texas prepaid plan works for those that say, I'm all in on that, I want to do it. So where do they start, Nolan?
Absolutely. So I'll share screen here with the Texas Tuition Promise Fund.com is where you would want to go. And really, it's a great website, Kevin. I've been doing a lot of digging around on this. And, a good place to start that I did was Plan Basics. And right now I'm on Plan Types. And so the basics of it, of course, is a lot of what we already went over. And as Kevin mentioned, we want to try to help out with just, hey, if you want to go forward with this, maybe what are next steps? And so the way the program does it is the way you're going to lock in today's rates is they call it a tuition unit. And so what does a tuition unit buy? And there's multiple types of units. And what I've found helpful is this visual. I'm going to zoom in a little bit. Right here, let me draw. Okay. So right here, we got the 3 ways to build towards your future education. And there, as I mentioned, 3 units. And so if, for example, you want to send your kid to a 2-year community college, and that's like your goal, if you want to have that paid for, then you can ignore these first 2 units because type 1 is the most expensive 4-year public school. Type 2 is the average cost. And then type 3 is where you would want to be. And as you can see, it's the lowest, the smallest of these bars, and that's because it's going to be the cheapest at the moment. It's the most affordable. And so that's just a breakdown of what those units look like. But Kevin, any extra commentary on that to help our viewers understand the units a little more and what that looks like?
Yeah, I actually think the units make it more confusing, the different types, Nolan. I would again come back to the currency. And the currency doesn't fluctuate here. A type 1 unit, $165. If you had type 3, you just have to multiply $32 times, I don't know what it would be, a certain number to get to 165. So really, I think the key is to buy units. And if you buy all the type 1 units, that you can still have them go to a community college. You would just have less units needed.
On the Texas Tuition Promise Fund website here, they do offer a calculator that I think is pretty handy to try to put into practice what those units mean, because as Kevin mentioned, it's really confusing and there's not a ton that's simple about it. So to try and put this to practice with your child and say, what unit do you want? So it's going to have the unit type, you put in their birthday, and I just chose right in the middle, type 2, and then they're going to have the different payment plans. So if you want to do a lump sum, you just do it right there. You can have all these different options. You pay till they graduate, different installment amounts, pay as you go. And so Kevin's going to add a little more here to your options, but that's just kind of to set the stage of what you'd be looking at.
Yeah, so right here, the reason why this calculator is so important is no one's going to pay for the whole year all at once. You're going to pay for it over time. So you put your child's birthday in there, and then you can see you can do 10 annual installments here. It's going to give you an amount that you need to put in per year. But what we show is that you're buying zero point 0.8, academic years there by paying $44.65. So we need to buy at least a whole year going forward here. Really, we need maybe 4, but let's say we want to buy a year. And so we have to actually use that toggle there to increase the amount of units that you're buying. So if you want to do so, so you just increased it, I think, type 2 units from 50 to 100, and now we're buying 1.7 academic years worth. Is that right, Nolan?
That's right. Yep. For 89, went from about $40 to $89 a month, and you're at 1.7 years now. And so, this is helpful to just be able to toggle back and forth to maybe you have a break-even point in your head of how much am I willing to or able to save towards this per month. None of us have unlimited money. We have a lot of competing priorities, and so being able to just see what that amount is and how much it's going to purchase could be helpful.
Yeah, Nolan, let's look at 4 years worth. Let's drag it over to pay for 4 years. That's good. 4.1 is perfect. So now we see it's 223 if we do monthly installments. But then we say, well, wait a second, let's just get it done over 10 years. Now, if you can go back up to the payment plan, we can go ahead and figure out how much over 10 years. Go ahead, click on that. And now we see it's gone up to $317. So anyway, you got to play with this calculator a little bit. Put in a type of unit, go with that for a while. If you wanted to switch the type of unit to type one, then you kind of start all over again. But this is why we don't think it's simple. But if you play around with it, you start to understand it, I think, Nolan.
Absolutely. And so for me, Kevin, at the end of the day, I think my takeaway is that both are great college savings vehicles. They just do different things. So, we went over those pros and cons, and it may not be that you have to use one or the other. They actually could maybe be used in unison, used together for a very optimal college savings approach.
They're both going to help you accomplish your mission. But if you're sure you live in Texas and darn it, your kids are going to Texas, then you can lean towards the prepaid plan, at least for the tuition. If you're not sure where they're going to go, then you lean more towards the 529. It gives you ultimately, even overseas, people can go overseas. Now with like things like aviation and other types of usages of the 529, again, it might be a little bit better than just having the more traditional public university. Doing both is good too. So they're really not polar opposites. They're both getting you towards your goal. So to sum things up, do something today. Get started, save for college. I can tell you they only get older faster. So start today. You start at 529. That's always safe. And then if you want to do the prepaid as well, just take an hour or two and go and play around on the website until you start getting familiar. If you're a client of Leading Edge, we're happy to help. And again, if you want to see other states, if you want us to go over other states' prepaid plans, please leave a comment below. And like and subscribe this. And if you know another person like Nolan that has a new baby, please forward him this video. So Nolan, thanks so much for your time today. It was really a lot of help.
Thanks, Kevin. I appreciate it. Thank you.
All right. See ya.
Leading Edge Financial Planning, LLC is a registered investment advisor. Advisory services are only offered to clients or prospective clients where Leading Edge Financial Planning and its representatives are properly licensed or exempt from licensure. For additional information, please visit our website at www.leadingedgeplanning.com. The information provided is for educational and informational purposes only and does not constitute investment advice, and it should not be relied on as such. It should not be considered a solicitation to buy or an offer to sell a security. It does not take into account any investor's particular investment objectives, strategies, tax status, or investment horizon. You should consult your attorney or tax advisor. The views expressed in this commentary are subject to change based on market and other conditions. These documents may contain certain statements that may be deemed forward-looking statements. Please note that any such statements are not guarantees of any future performance, and actual results or developments may differ materially from those projected. Any projections, market outlooks, or estimates are based upon certain assumptions and should not be construed as indicative of actual events that will occur. All information has been obtained from sources believed to be reliable, but its accuracy is not guaranteed. There is no representation or warranty as to the current accuracy, reliability, or completeness of, nor liability for, decisions based on such information, and it should not be relied on as such.